Okay, welcome on in here, everybody, to our user group webinar. My name is Jim. I'm coming to you live on a sunny day here in Columbus, Ohio. Welcome on in. We're going to be talking about some of the advanced transactions in the accounting module. Should be a shorter webinar here today, just a couple of transactions we want to learn how to use here. Before we get started with that, however, a quick word about your GoToWebinar control panel that everybody here has on your screen somewhere. There is a small red button, red or orange, in the upper left-hand corner usually, with a little arrow on it of that control panel that allows you to click it to either minimize that control panel, which is going to open up a little bit more room on your display to see what we're discussing here today, or maximizing that is going to give you access to the different functions there, including the questions section. And so you can feel free to type any questions that you have as we go through our topics here today. Please keep them on topic, just with transfer transactions and journal entry transactions in the accounting module. I may not get to those questions as I go through the presentation here today, but I will leave the room open afterwards to answer any questions that you have at that time. So with that being said, yeah, and the other thing I always forget to mention is that if anybody out there has our regional training workbooks, the topics that we're going to be covering today are in the Accounting 202 or A202 book, and we're going from pages 2 to page 8 in those workbooks. So again, we're just going to be covering some of the other types of transactions. Let's go ahead and take a look at this. I'm going to open up the accounting module. If we go to the transactions tab along the top here in accounting right here, you'll see a series of all of the different transactions that we're going to cover. We're going to be covering this transfer transaction right here, as well as here underneath other. We're going to be, I can't draw with this. We're going to be covering this journal entry transaction right here. So the transfer as well as the journal entry is what we'll be talking about. So, all right. So the majority of the things you're going to want to do in the accounting module are going to be most commonly handled by the enter income transaction, and another kind of part of that for folks who use our donations module. The majority of your income is going to come here from transfer donations. So income coming into the church usually is going to be handled in one of those two ways. And another common way we do transactions that we use are entering bills to record money that you owe to somebody, and then paying bills, which is paying money back to an entity that you owe money to. The majority of your transactions are going to be handled that way. We will also talk next about performing a transfer. Now, opening this up takes us to this window right here, enter transfers. What this transaction allows us to do is to transfer values, whether that's funds or different or monies, from one account to another account of the same type. So whether that could be any of the 5 major accounts, whether that's an asset to an asset transfer, liability to liability, fund balance, income, or expense. So from one type of account to another type of the same kind. So for example, if we want to, and the way this works is you take the funds from one account into another one. So you select one account right here where it says from account. Once you have selected that, over here in the to account, it will only be those same types of accounts listed in here. You fill in the rest of the information in here and perform your transfer. So my first example I want to give is we want to transfer funds from our general tithes and offerings. We had mislabeled some of our transactions here. Now, when I select a for account or an income account, when I click on my down arrow over here, that's all you're going to see. And we're going to transfer some of our funds from general tithes and offerings over here into loose offering income. We had made some corrections over in the donations module. As of Sunday's date, up here in the upper left-hand corner, you can select a different date occurred. It defaults to today's date, so let's go ahead and select Sunday. We had made some corrections over in the donations module that were not transferred over here to accounting. So instead of making a change to the entire batch and all of the income transactions that were part of that, we just want to move some of the money from our general tithes and offerings over to loose offering here. So you select those accounts at the top, you enter the amount that you want that to be, $45. You can, if it's an appropriate account, you can select a payment method as well as a check or reference number that's not appropriate in a income to income transfer. You can enter transaction comments right here. Clicking the Done Add to Batch button over here on the right side adds that to a grid down below. You can see the details of that transaction by clicking on the plus next to the account type here. It will expand. It's going to show you the effects of that transaction. Pretty simple, just moving monies from one account to the same type of account. We're going to perform another one here as well. And this is a common type of transfer, which is moving monies from one of your funds or 3 accounts to another fund. Because of the way fund balance accounting in our church windows is set up, monies that exist in one of your funds does not necessarily correspond to money in an actual asset account, for example, a checking account. A lot of organizations, however, enforce that type of if I've got X amount of money in a particular fund, for example, my general operating fund, that money is reflected in a particular checking account. So a thing that a lot of our organizations have to keep in mind is that if you're going to be transferring money from one of your fund balance accounts to another one of your fund balance accounts, that does not automatically also in church windows transfer those monies from one of your asset accounts to a different one, from one checking account to a second checking account. So we're going to go ahead and show that process of transferring from fund to fund and then the corresponding asset to asset transfer here. So here's our general operating fund balance account, and we're going to be moving some money from our general operating fund balance over to, let's call it our mission fund here. Now let's just do our building fund. So it's $1,000. We're going to move from our general operating fund over to our building fund. Add that to the batch. You'll see another transaction appear down here at the bottom. Again, you can expand that by clicking on the little plus to see the details. Now again, that's not moving money from one of your checking accounts into another one. There will need to be a corresponding second transaction that represents that. So we'll go ahead and select moving this money from our Huntington Bank checking account over into whatever, Fifth Third Savings. So it's the same amount we're transferring, $1,000. This one, notice the payment method is active on this one, so we can call this one an electronic file transfer. If there is like a transaction number that you get from your website, you can enter that here. And then you add that to the batch, and you'll see another transaction in our grid down below here for all of our transfers that we're performing. If you're performing a series of transactions like this, and you want to see the effects that it's going to have in your chart of accounts prior to posting it, you can use this button up here in the upper right-hand corner, Show Running Balances, and it's going to open up a small window showing you the effects of what you're performing in here. This is training data that we have here for our presentation here today, so we've got some goofy looking numbers in here. But the way this ends up appearing, it's going to show you in a column what your balance is prior to posting your transaction right here for current balance. The effect of that transaction appears right here, whether it's plus or minus. If it's a minus amount, it shows up in parentheses like you see here. And what your adjusted balances are going to be after your transactions are shown in this column right here. So that's a good thing to call up when you want to just kind of double check that everything's going to end up looking how you want it to look when you perform your transactions. Closing out of here, you can click your Post button in the lower right-hand corner, and it will make those changes. You can print a transaction journal of this by clicking yes here, and it will be a little log report of the transactions that you just performed under normal circumstances. There we go. So it's going to show each of your transactions and the effects that they had there. Comments are listed in the column on the right. Okay. Simple, moving money from one account to another account of the same type in church windows. The second transaction we want to preview here is a journal entry transaction. Now, a journal entry transaction is for transferring money from one account to a different type of account. Journal entries are normally going to be unusual situations. You hopefully aren't going to have to use this too often, but there are certain unusual circumstances where it's going to be necessary to perform this. And the journal entry transaction can be found here under your Other button, right here where it says Journal Entry Transaction. When we look at this, again, you're going to have a date occurred that you select here. Any comments that you may want to post can be entered in here. Notice, right here on this screen, not only do you enter what account you want to affect with this transaction, but you also enter whether it is a debit or a credit to that account. So in order to perform a journal entry transaction properly, you're going to need to know the effects of debits and credits on the different accounts that you have in your church in your chart of accounts here in accounting. In the regional training workbooks that I referenced at the beginning of the presentation, this is in there, but I also wanted to preview here in our webinar the effects of debiting the 5 different types of accounts and the effects of crediting the 5 different types of accounts here in your chart of accounts in church windows. I am not an accountant myself. I do know the way church windows works. So what I would say is that when my non-accountant brain thinks of the word credit, I think of something, naturally I think of something increasing in value. You're crediting something, it increases in value. And debiting something decreases its value. So my non-accountant brain, the effects of credits work the way I think for liability accounts, fund balance accounts, and incomes. So when you credit those three types of accounts, that affects an increase for liabilities, fund balances, and incomes. The effects of debits bring those values down for those three different types of accounts. So the three in the middle, if you list them, asset, liability, fund balance, income, and expense, behave in that manner. They behave the opposite for the accounts on the outside of this. So assets and expenses behave the opposite, where crediting them decreases and debiting them increases them. Okay, so with that in mind, the behavior of these types of accounts, you can come in here and perform your journal entries and kind of know what's going on with it. This also, even more so than any other transaction that you've got in the Church Windows program, you can click this Show Running Balance, move this over here kind of out of your way, and keep an eye out and make sure that the things you think you're transferring in here are actually happening. Oh, right. So that little sheet, if you have our regional training workbooks, that's on page 5 of our regional training workbooks in the Accounting 202. That's where I kind of pulled that out of. Okay. So the example we're going to use here in our presentation here today. Here's the example. The church received a gift of $1,000 for noodle making equipment to purchase a noodle making machine, appropriately enough. The money was sent temporarily into an income account for other miscellaneous income. So somebody donated, we received a gift of $1,000. If I come over here to transactions and browse, and I scroll all the way down to my list here, you'll see that $4,000 income right here. Other miscellaneous income on April 30th, we received that $1,000 income. Okay, so what we want to do is transfer this from our income account into an expense account to reflect that we bought our noodle maker. Okay, so again, I'm going to show my recurring transactions. No, wrong button. Running balances up here. Transaction comments, we bought our noodle machine. Okay, so we're going to come down here. So the first account we want to affect is that other miscellaneous income. So I'm going to go ahead and type in the word other here, other miscellaneous income. And we want that income account to decrease by $1,000. And again, here's our income account. To get that to decrease, we want to debit that income account. So I'm going to put $1,000 here in debit. Over here to the right, if you click your little plus button over here, it's going to add this to the breakdown of your transaction that you're working on. When I click plus, you'll notice that in the debit amount column, you'll see at the bottom that you've got a total debit of $1,000. So for this to be a valid transaction, we have to have $1,000 in the credit column as well. So we have to add additional lines to our transaction here. So the other side of this is going to be for our building fund expenses is the way we've got it listed here in our book. So building fund expenses here, it's going to be $1,000 credit to that. And when I add that to my breakdown by clicking on my little plus button over here to the right, you will now see at the bottom our totals. Our total debit and our total credit are equal, and I can click Done, Add to Batch. That adds it to our breakdown right here. You'll see it's going to take $1,000 out of our other miscellaneous income. It's going to show us it's going to reduce that down to $910 from $1,910. Building fund expenses, we don't have a balance on there right now. It's going to bring it down to negative 1,000 here. So you can do multiple lines in your journal entry here as well. And when you're all set to rumble, everything looks how you want it to look. You simply click your post button right there. So again, these are all going to be unusual situations when you use journal entry transactions. Some other examples, common examples of this are for pledging churches. If you have people who pledge to next year's pledge fund, and they want to give this year towards next year's pledge, the way that is most commonly set up is that you record that money in a liability account until you're ready to then, in the following year, move that money out of that liability account into the appropriate income. So that's a common one as well. So if you have a prepaid pledges liability account and you're going to take money out of that liability account, you're going to want to debit it. Okay. So I would take $100 out of that prepaid pledges, and then you'll record that as, oops, income, or wrong one. General tithes and offerings. You're going to then record that for a particular income account. Now that we're in that appropriate pledge year, when you add that to the batch, you'll see you're getting $100 additional into general tithes and offerings, and that prepaid pledges comes down by the same amount. So that's another example that I'm kind of aware of and how that all works. But there's different situations that you might get into with this. Once you've got everything entered in the appropriate manner on here, you simply click Post, and then you're ready to go. Okay, so that's all of the information that I have for you guys here today. I went a little bit over, actually. I thought I was going to go shorter than that. I'd like to thank you guys for joining me here today. If you're all set to go, feel free to click on the X in the upper right-hand corner of your GoToWebinar control panel. That'll exit you out of the room. So I'd like to thank you guys for joining me here today. For folks who do have any questions, I'll leave the room open for a little bit and I'll answer the best I can. Thanks for joining me, guys. Okay, Greg has a question about a check that is never cashed. Let's see. You paid a bill to somebody and that cash was never, that check was never cashed. I believe that would be a journal entry transaction that you could enter. You'd want to basically put that money back into your asset account and remove it from the expense account to do that. If that was handled a year ago, I quite frankly am unsure how that's handled in church windows. If it's in the current year, you'd remove it from the expense account and that expense would decrease. But you don't want to reduce your expense in the current year for something that was expensed out in a prior period. You know, for more sort of grittier accounting questions, I'd recommend giving us a call into our support line. Our support line is at 800-533-5227. The big brains here that are more into that accounting section, more bookkeeper headed, would be able to answer that for you. Yeah, Sandra, if you do have changes that need to be changed in donations, generally speaking, we're talking about if somebody's giving statement is going to be incorrect. Absolutely, those questions need to be, those changes need to be done over in the donations module. Oftentimes you would then transfer it over into accounting, assuming that that's okay with the treasurer who actually works with the accounting module. Sometimes it's appropriate and sometimes it isn't. So if you made a mistake over in donations, you can make that correction over there. Then oftentimes you would want to communicate with the treasurer before you post that transfer. And if they say that it's okay, you can do your transfer. But sometimes, like in the situation we talked about in our webinar here, sometimes your treasurer says, don't worry about it, I can handle it myself, perform your transfer the way we discussed earlier. So, you know, there's different circumstances. But yes, if somebody's giving statement is going to be incorrect, absolutely you want to make those changes over in donations. Awesome. Thanks for joining me. I think we're all set here, folks. I'm going to go ahead and exit our room. Everybody who's still here, I'd like to thank you so much for joining me here today. I hope you all have a good rest of your Friday. Bye now.